Hey traders, this is Blake Morrow with Traders Summit, and you are listening to another great interview with Jim Welsh of Macro Tides. Jim, how are you? And happy Friday to you.
And not only happy Friday, happy Friday the 13th.
It is,
For
Friday
you
the
and everyone
13th.
else.
It used to mean something, and people used to get a little freaked out about it. But I think Freddy Krueger kind of jumped the shark there. Anyway, hey, I wanted to ask you, since the stock market, once again, you take the S&P, the Dow, almost the Nasdaq, we're going to close at all-time highs. Nasdaq's just off all-time highs.
Yep.
What do you make of this price action? I mean, nothing can stop this Teflon market.
It sure feels that way. I think, I do a weekly technical review every Monday, and I'm thinking about calling it sleepwalking, or titling it sleepwalking. And that's kind of what's happening. We're seeing volume go down every single day as the S&P grinds higher. The Dow has gotten some boost from individual stocks, obviously. But what's happening, Blake, is people are gravitating still to the mega cap stocks. Rates popped. So we're playing this inner game within the market, the game within the game of, hey, if rates are down, we're going to buy the mega cap. Rates are up, we're buying cyclicals. Yeah. Now, the thing that I would also mention is, just straight on technical analysis, you look at things like the advanced decline line, number of stocks making new highs, and as I mentioned, volume. Those numbers all look pretty crummy. So like yesterday, new high on the S&P, breadth was negative. The number of stocks making new highs was really, really unimpressive. So the technical underpinnings in this market are weak. What we need is a wake-up call. So we're sleepwalking. What is going to be the wake-up call? The consumer confidence number came out this morning, and confidence dropped pretty significantly. And within the report, inflation expectations didn't really drop much. So people are responding to the Delta variant, but when they go to the store, they're seeing higher prices. I think that is going to ultimately prove to be a problem for the market. So I think we're at a very, very important juncture. My expectation remains that we're on the cusp of a 5 to 8% pullback in the S&P and other markets. And when it comes, it'll probably come quickly.
You know as well as I do, Jim, especially from a technical perspective, when you're in what I like to define where we're at right now in an ascending wedge. An ascending wedge, they're powerful because they're bullish until it actually shows a reversal. But that also suggests that you don't want to chase highs, because it's better to buy dips into the wedge support versus buying on breakouts. Because every time you buy a breakout, you have it come back in your face 5 or 8% or whatever the case may be. Doesn't mean the market's bearish. It's just, the dips should be bought rather than dips should be, than buying into rallies, right?
Yes. I mean, again, my take has been is we're going to have this 5 to 8% pullback. I advise people to take a small short position when the S&P got above 44.30, about a 1/3 position, because once we get this pullback, I do think that we're subsequently, in all likelihood, going to push up again to higher highs, because the overall, the economic picture is good. In 40 states, the infection rate for Delta actually peaked this week and is starting to come down. That implies that hospitalizations should top out sometime in the next week or 2 weeks. And, that is going to be good news. The irony is that good news on the Delta, how is the bond market going to take that? Are rates then going to, after a dip here, because bonds were off, I think, 6 or 7 days in a row. So this pullback we've seen since yesterday's highs fits into, okay, they made a move up, they're pulling back. But I think ultimately the 10-year is going back up to the March high. So that is going to be the question, I think, after the next week or two. But again, my expectation is we get 5 to 8% pullback. And if everything important support levels hold, then I think we can anticipate another rally to new highs.
Jim, you brought up a point earlier, and I want to ask you about this, because this is important for those of us that have been in the markets, I mean, I've been in the markets for over 20 years, almost 25 years now trading. And I know you've been in the markets longer than that. It used to be when stocks go higher or the market moves higher on lower volume, that's a bad thing. Does that hold true today? I mean, is that truly the case right now?
Not as much. I mean, it hasn't been for years.
Yeah.
And that's why you see volatility coming down with the lower volume levels. So it doesn't mean as much. I bring it up at this point in time just because of how it ties into sleepwalking, in the sense of, okay, hardly, trading activities almost dormant, and yet we're just inching higher. So to me, that's where that applies. But the key comes down to taking out, let's say 44.20 or something like that. I'd have to look at the chart to see. The last little low that we've hit over the last week would be, to me, a sign that we're rolling over.
And the thing is as you mentioned to your traders in your newsletter, taking a 1/3 short in the S&P, looking for it to pull back, that fits in with the actionable ideas, at least in the current time frame. So, and remember, guys and gals, if you're listening to Jim and you're listening to him every week, he contributes to the Trader Summit. You see his videos, you see parts of his newsletter, and to get more from Jim each and every week, make sure you sign up for his newsletter, and you can find that description in the description of this video. Jim, I want to thank you for being with us once again. It's always a pleasure to talk to you, and for me, it's a highlight of my week.
Well, hey, thank you so much. I really enjoy our conversations, Blake, and have a wonderful weekend.
You do the same. All right, we'll talk to you soon.